All right. Good morning, good afternoon, good evening, wherever you are on this beautiful planet. Welcome to the Inner Circle Live pre-New York session. I'm your host for this morning's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for each and every one of you being here with us this morning as we take a look at technicals and the fundamentals to see what we can take advantage of in this Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. If everybody can hear me loud and clear and you're ready to go, just like always, drop me a number one in the chat. Let me know that you are all set. You can hear me, and we can get this session going. All right. Good morning. I see the ones coming in, so that means technically I am good to go. You guys are locked in. So let's jump out of here, right? Go on over and we will start each morning with our credo, right? So let's make sure that we take massive action, meaning, right? Make sure that we are accepting all possible losses before entering the trade, preparing you for any outcome. Let's make sure that you center yourself in body, mind, and spirit, ensuring a balanced approach to trading, trust in your education, your strategy, trading skills, and intuition. Imagine your trades successfully materializing. Obey your new trading strategy, avoiding, right? Obey your trading strategy, avoiding decisions based on greed or fear, and never make sure that we are never looking back or stopping once your trade has commenced, right? So let's lock it in. Let's take massive action this morning. Ryan, good morning, sir. How are you?
Bro, good morning, man. I am doing well. Doing well. How about yourself?
Oh man, doing pretty good, man. Always glad to be here with the family in the inner circle trade room. So I am
Absolutely.
locked in, ready to go.
Yes, sir. So am I, man.
All right, so let's get to it. Today, right? First Friday of the month on this January 5th, we are moving on into 2024, right? And we have employment numbers coming out for Canada. So we've got the employment change and unemployment rate numbers coming out at 8:30. Keep that in mind for those of us who are in that UCAD setup. And also here in the United States, right? The big one, the non-farm payroll, the average hourly earnings and the unemployment rate today at 8:30. And then we've got ISM services PMI as well. And we even at 1:30 have one of the FOMC members speaking today. So it's going to be a busy Friday morning. All is occurring before noon, and we will see what it brings us. So just checking out the dollar index, held around 1025 on Friday. Uh, and right, was headed for its best week since July as traders scaled back bets on early and steep interest rate cuts from the Federal Reserve this year. Latest data showed that weekly jobless claims fell more than expected last week, while U.S. private businesses hired more workers than expected in December, highlighting the labor market's resilience. Investors now look ahead to the highly anticipated monthly jobs report, which is expected to show that the U.S. economy added 170,000 jobs in December, fewer than 199,000 in November. Markets now see around a 65% chance of a Fed rate cut in March, down from nearly 90% seen a week ago. The dollar strengthened across the board this week, with the most pronounced buying activity seen against the Japanese yen, right? We talked about that yesterday. Currencies across the board pretty much moving along against the yen. Moving over to the Eurozone, right? Inflation rate rises less than forecast. So the annual inflation rate in the Eurozone went up to 2.9% in December from an over 2-year low of 2.4% in November, but below forecast of 3%. All right. It is the first increase in inflation rate in 8 months due to energy related base effects, right? And that always seems to be one of the major issues in the Eurozone. Meanwhile, the core rate cooled to 3.4%, the lowest since March 2022, in line with expectations. So we'll continue to keep an eye on that for the Eurozone. Here we've got Germany, right? Largest player in the Eurozone. Retail sales fall more than estimated. So we'll take a look at the chart, see how that's impacting some of the euro pairs, especially with that inflation rate rising less than forecasted. So pretty mixed. It's mixed data coming out of the eurozone. Ryan, anything fundamentally that you're keeping your eye on?
Um, Still watching the Japan situation and how the earthquake and the plane crash is going to impact them. There's an article that came across, I haven't finished reading yet, but talking about how this scenario could continue to put pressure on the Bank of Japan. So um, I'll update you guys when I finish the article, and I'll send you guys the article as well.
Appreciate it. Appreciate it. So first week of the year, right? I usually kind of slow walk it into that first week to see how things are shaking out, what the investors are thinking, and what the overall sentiment is anytime we start a new year. But we're coming in with a little bit of a bang to start the year with. We're coming right into some key data. At a very important time considering what's going on globally. Right, we got wars. Multiple wars going on. It's just a lot. So. But it's good for the volatility. So that's that. Let's take a look at the DXY, right? And so we look at the US dollar, right? And we've kind of got that morning star pattern going on. So it falls in line with the reports that we are seeing that we're getting a strong dollar, right? So Fed's cutting, I mean not the Feds, but the investors cutting, right? The expectations down a little bit in regards to a Fed rate, cut in March. And we're seeing some strength out of the US dollar. So it's been a strong week, right? So we want to take a look at our dollar pairs just ahead of non-foreign payroll today. You can see here how, right, we've broken above key daily level and we are moving bullish. Our stochastic is actually in the buy zone. And we can see here how we've pushed now on the 4 hour, right? We had that 80-20 that Ryan called out a while back, right? We found support and now we've broken a daily level, but we are now pressing right up against this downtrend line. So we will see what happens with the non-farm payroll today and what type of price action we get as a result of that report. So we'll continue to watch that closely. Right. Fib on the upside is at the D extension. It is. Right. Great observation. So we got some things coming into alignment where we may see a reaction. So we got good numbers on the private sector job numbers that came out from ADP. So we'll see what happens with this report, right? So we're expecting uh, you know, less jobs, right? Than slightly less than what we saw in November, but still job gains nonetheless. So let's see what happens with this report, right? So if you're in any type of US dollar pairs or anything like that, right, just make sure you're managing your trade wisely, okay? But we are at an extension, right? So that's some good symmetry there, right? Coming right in at that 50%, right at the D extension. And we'll see how it plays out. Any questions on the US dollar or anything fundamentally? Nope.
No, sir.
All right. So we are good to go. All right. Let's click over and we got a question? No? Okay. Thought I heard something. All right. So let's move on, right? We'll check and look at this Aussie CAD trade real quick that we've been waiting on forever. And then we'll look at some of these dollar pairs. So you can see we're having a bearish week on this Aussie CAD, right? So it's moving down. We come into our daily chart and we see that we are moving bearish. So we're finally getting price to move in our direction. No, Don. Now, if you talk about that, referring to that DXY, we didn't get any retracement at all on that, right? We shot straight to the D extension, right? So that dollar is moving, to the upside pretty good. But on this Aussie CAD, right? We're coming into this 4-hour support, right? We had that one marked up yesterday, that 4-hour support at 89.53. We crashed right down through that. And now we're coming in here at 89.28, and we are continuing to move south, right? So we'll see if we can break that level and then just keep it moving. So I am still holding that position. And it is moving in our favor now, finally. Anybody else still holding this Aussie CAD? I know, Ryan, you're holding it.
Yes.
Yes. All right. Awesome. Let's see how it plays out. See how it plays out. Keep in mind, right? We've got employment data coming out for Canada this morning as well. Okay. So that's that. So let's take a look at our dollar pairs to see where we are just ahead of non-farm payroll. Today, we know that that always has the potential to be a big mover. And Ryan hit me up early this morning and said, Benny, we are looking at on multiple dollar crosses. We are looking at evening stars on the weekly, right? So playing into that dollar strength, look at that, right? So we've got decision, indecision, decision from a higher time frame. So Ryan, I'm gonna drop you some sevens in the chat, my man, for recognizing that's happening on several dollar crosses. So let's see what happens when non-farm payroll comes out. That is a great observation to be able to go to that higher time frame and spot that pattern that seems to be occurring across multiple pairs, right? So that is awesome. So we've got an evening star and we are moving. So let's see how we close out the week, right? And so that plays into what we were talking about, that correction on the Aussie dollar. And we had this zone mapped out to say, hey, let's see if price is going to settle and create past resistance becoming future support once we get to this zone here. Okay, so it is going in the direction that we thought. If we come down here to the 4, this is one where it just missed that 118, 127 zone and broke back below that 68.47 level. And we are moving bearish, right? But that's the natural waves, right? Occurring in the market, those ABCD waves. So let's see what happens with the non-farm payroll, see if it serves as a catalyst, either to continue to push price further down or, right, to create that reversal type effect. So we'll see how that happens today, going down to the 1 hour, just tracking that B2C move off the break. And we can see how it came down off the highs, right? I didn't play it because I was looking forward to moving to that 4-hour zone. But some of you might have played it with that break back below 68.47, right? If you did, kudos to you, because that is continuing to move down, right? That's headed towards the extension. We've broken the inner trend line. We know that price kind of likes to gravitate towards the next trend line, which is the outer trend line. And that's what we have. We have an inner the outer trend line break. And look at the ABCD. This is beautiful here, right? That is gorgeous price action. Right? That's an ABCD wave. I've never seen one. Beautiful textbook pullback. Look how it pressed up against this downtrend line. It rejected, and we got bearish. Right? So if you're trading with the trend, you like those type of moves, those C to D moves, this is a classic one here. Right? We're starting to stall a little bit. So if you did take that short, just manage your trade, right? Ahead of just your stops, ahead of a major fundamental announcement coming out. Okay, so that's where we are. There any questions on the Aussie dollar? Really, really nice price action.
No, sir.
Yeah, you're in a buy right now on the so you're limited in. So you're in a buy right now to the with that fib running to the upside. Should be getting close to that, eh? Yeah. Yeah. So that may take you out. It may take you out because, but that's larger wave, smaller wave, right? So we've got that correction, right? How we drew it up here for that deeper correction to occur. So if you played it off the one, right? This is just the game we play, right? So if you were playing that U-turn off the one, it may get taken out because we have a deeper retracement occurring on the four, deeper correction occurring on the four. So we know that that can happen. So on the 4 hour, on your 4 hour chart, right? It's just we're retracing, right? 50%, 61.8. It's a pretty large fib. And so that will cause an occurrence where you get your A to be taken out on the smaller wave on the one. Right. So we'll just continue to watch it. We do have a break of that outer trend line. So we may move to that D extension. Right? But you never know what happens with this non-farm payroll coming up. All right. Yep. But you use a proper risk management. So I know you are all good on that. And that is the Aussie dollar, right? Let's take a look at Bitcoin versus the US dollar. We know we are moving bullish, right? We have been at least. Okay. And so you can see how we got to retest at that 24,694. And we're now at 43,845. If we come down to the daily, right, you see we're kind of just stalling a bit now. So we'll see if the non-farm payroll reports can force that, either to the upside or downside to break out of this consolidation that we're seeing. Here we are on the 4, okay? No 382 correction yet on the 4, and we're kind of just hovering on Bitcoin, kind of just ranging. So nothing too exciting there. We need price to break out of our range here that we have going on right now. Okay, so we'll continue to watch that. Hey, but that's what happens, right? Price rate has been moving pretty good to the long side on Bitcoin. A pretty good impulsive move, and now we're stalling. Right, that's what happens. The market's taking a pause. So let's see what happens. See if we can get a breakout. Any questions on Bitcoin? Still hanging, Joy. Still hanging. All right. All right. Continue to be patient. Hey, moving on to the Euro USD. All right. So here's another one, right? Weekly, right? Evening star, right? Forming, right? And we know that it's a weekly chart, but if we close out with this pattern, right, then we know that what that's saying is that, hey, there's the potential for more downside pressure. Not a guarantee, right? But oftentimes, right, candlestick patterns, right, are trying to tell us something, right? In this case, we may see more bearish pressure. So we can see here on the daily. I don't know why I have that. You see, coming out of I guess it is coming out of the holiday. Just want to make sure that
Yeah, mine
this
is
chart is showing up correctly. You have it too?
Yeah.
Okay. All right. Good. Yep. So that's that gap coming out of the holiday, which is cool. Moving down to the 4, right? And we were saying, hey, maybe we get this pushed back down, right, to retest that trend line. And that dollar strength, that's exactly what is forcing price to do on this pair, right? Is seeing if we can move down. We haven't broken that counter trend line yet. So we just continue to let it ride. Our 4-hour stochastic, right, is looking bad. It's bearish, right? We are in the sell zone. Okay. So again, we've got non-farm payroll coming up. Let's see how things shake out. See how things shake out. All right. So that's where we are. If you were playing this off the 1, right, we know that we had an 80-20, and we have now reached TP1 investment. Okay. The 1 off of that correction that we're seeing on the 4 and the higher time frame, put us in an 80-20 scenario on the 1-hour chart. Came up just shy of that daily 111 resistance zone, and we shot out of that zone, right? So we come and we move down. So just like that, right? You've got 200 pips, right? So that's a 200 pip move to the downside there. Okay. And that is the Euro USD. That's where we are. Another 80-20 on the down fib. Awesome. Let's see what's going on there. Yes. Right. Yes. 1 hour stochastic in the buy zone. We got some misalignment on the 4 with it being in the sell zone. Right. But hey, Donette, we appreciate you. Right. Some sevens in the chat, right, for identifying that. Okay. So this should be interesting. See. Okay. It's interesting, right? We got some start the year, some dollar strength. Right. So let's continue to see how that plays out. Because I'm still wondering, right? Is this dollar strength just pushing everything for a high price in order for investors to get back short on the dollar eventually? Right. Ryan, what are your thoughts on that? Coming out of last year with the dovish tone, knowing that we're getting rate cuts this year, I think that we've got the bullishness with the estimates now being cut for earlier rate cuts. What do you think?
Man, it's going to be an interesting play.
Mm-hmm.
Um, I do think that I think we are looking at potentially getting the higher prices on the dollar to then get short.
Mm-hmm.
Um, but I think it's a matter of when.
Yep.
I think it's a matter
Yep.
of when. The technicals are interesting in the situation. Looking at this euro dollar, because if you go back to the weekly,
Mm-hmm.
um, you run the fib off the low, you still have an 80-20. Also, you have a crown pattern right there
Yep.
with that evening star being the right tip.
Yeah, I got you.
So the technicals are interesting in the situation. Um, but I definitely think that investors are looking for opportunities to push the dollar back down and run the stock market back up. And with this being an election year and all of that, I think that'll play into it. So I'm leaning towards yes, that's the scenario, high price on the dollar to get short. But I think it's going to be a matter of when and what the back and forth will be. That's where I'm kind of stuck.
Agree. I agree. That's why I've started to go up kind of like with trade orders, trying to see how things shake out for the first, week or so during the new year, because there's a lot to consider. And
Ton.
it is a lot to consider because we know, right, that the dollar plays both sides. It can act as the safe haven too, you know. If and then you run into the scenario where if you get a non-farm payroll and a jobs numbers that are above forecast, that could be good for the dollar and the stock market, to be honest.
Mm, yeah.
You
Yeah, I
know,
didn't think about that one. Yeah.
so it could be good for both. Whereas, there's certain reports and certain data that comes out that actually could be good for both the dollar and the stock market. Whereas a lot of times we often see if one's doing good, if one's moving bullish, the other one's moving bearish, and vice versa. Whereas sometimes you get data that's good for both. So, because of what it represents in regards to the overall health of the economy. So we will see on this one. But you know what? I tell you what we're gonna do, man. We're gonna trade what we see, huh? Until things start to shake out.
Yes, sir.
So that's that. Appreciate you. Uh, so that is the Euro USD, right? We've got a evening star forming, right? We've got an overall, you know, we're in the middle of an overall ABCD wave on the 4 that's giving us, kind of a secondary correction moving back down. Uh, and like Donette said, right, we've got an 80-20 on this sub fib here, and it's just ahead of non-farm payroll. So this is gonna be interesting. to see nonetheless, right? And then we go and we'll take a look at this pound dollar. Okay, this pound dollar, which is kind of giving you that similar price action that we're seeing on the Euro USD. We don't quite have, an evening star type scenario here, right? Because you've got some indecision, there, right? You've got a doji there, right? Look at that. When we got that indecision, then we're moving bearish, but similar, but not quite. But we can see that we've made that correction. We're kind of pausing and ranging here, right? It's not so not as pronounced, right, as we saw that Euro USD. But in regards to, you know, that initial correction and then the secondary pullback here, retesting this support, right? So it may come down to retest that again, right? 1, 2, 3 across the board, right? This level here at 126.12 is pretty strong. We got a stochastic where that momentum is still pressing to the downside. So we may get another retest of this support, right? And all this is lining up just ahead of the non-farm uh, payroll that's due out. So we're still in that situation where we got bullish, right? Huge bullish engulfing candle. You can't deny that, right? And then we started to push sideways as dollar strength returned to the market at the beginning of the year. So we'll continue to watch that one today as well and see how it plays out. Let's see what we got going on here on the one, just to zoom in, right? Same scenario, right at this level. We broke above it, and now we keep retesting that zone at 126.12. So we've got similar, right? Similar scenario with the Euro USD pound dollar, where 4 hour stochastic, right, is still pressing down, selling off, and then we've got a 1 hour scenario where our stochastic and the momentum has already returned to the buy zone. Okay, so let's let it sort itself out. We actually, with the way this price action is looking, we actually need a good catalyst, all right, to help give us some overall direction. Today, if the dollar goes above 102.60, you're bullish. Then I'll wait and see what happens at 103.50 the yearly open. All right, I like that. I like that, Reese. Thanks for sharing that. Thanks for sharing that for sure. Right, appreciate you. I like that. Reese is constantly studying that dollar and that price action in those levels, right? Yeah, get you some sevens in the chat because we always appreciate your thoughts on the U.S. dollar. Uh, you've been on the money on several occasions with that. So thank you very much, sir. All right. So let's move in. I'll keep an eye on those levels for sure. Take a look at this NZD USD. All right. All right. So we've got another evening star scenario. Okay. There on the weekly, happening across the board, right? Look at that. Look at that correction coming down on your daily, right? We haven't gotten a 382. Look how it's rejecting. We didn't get to that D extension. Look how it's moving, right? And that's key level two up there. Look at that, right? But look at it moving down, daily stochastic, selling off. Gonna wait for the pullback. Yeah. All right. All right. I like that on the Euro USD. Just be patient. Be patient. Look how this is breaking back. Look how this is breaking back down. Okay. We got a 382 on this. Look how it's moving back down. So we're seeing this across the board on these dollar crosses. Okay. Look at that. Right? Let me move this out now because we've broken it. Okay. So let's see, right? This is gonna be fascinating to watch this morning, considering where a lot of these pairs are sitting and some of the opportunities that may present itself as a result. See what happens because that's deep. That's deep in the zone, right? That's deep in the zone there. So let's see what happens with that. Any questions on the NZD USD?
Hey, bro, this is another one where the down fib, you also got an 80-20.
All right. All
Came
right.
close to a 382, but didn't get there.
Didn't quite get there, didn't. Okay. Okay. This team is working, right? Putting in the work. We've got this thing down now. All right. We've got it down. We've got the technicals down. We're getting the fundamentals down. So what's left is our risk management and our psychology, especially right as it relates to our patience, our overall patience, right? Because we're not looking for, some of us may, right? If you're a scalper, but for the most part, with these swing trades, we're not looking for, 5 pips, 10 pips, 15 pips. These are major movers, right? And in order for us to take advantage of those, we have to be patient. We have to be patient waiting on it to set up. And then we have to be patient once we get into the trade and let them play out. Okay. So this is where we are on this, right? So we're deep into the AB boundary. And as long as it doesn't take out the A, it has no choice but to go our way. Okay. And we can see how we kind of think the opposite of a lot of people. There's some videos and things I've watched on, people using Fibonacci sequence, and you will hear people say like, well, once it gets beyond the 786, I mean the 61.8 and it presses deeper, is most likely that trend is going to be over, is going to come to an end. Like I've heard that several times watching videos, and we're sitting up here saying, hey, we like those deep corrections, right? Because it helps us in regards to our risk reward, right? There's a lot of upside potential to that, right? If we catch that in that zone and that wants to get back long, look at that, right? If we've got our stop below that A, it's like I'm willing to take that, right? Based on the upside potential on that, especially if we can move and get a decent trend line break and wait for that additional confirmation. You guys follow me on that? Drop me a 1 in the chat. We like those. We like those deep corrections, right? Makes the decisions a little bit easier, right? If we're looking to trade with the trend, right? Yep. That and I see that, right? The risk and the mindset that you're struggling with. Now, the risk comes down to math, right? That comes down to working out the math every single time. Okay. And staying within that risk parameter. If you're going 2%, even, you know, if you move higher once you collect your data, it's just a matter of sticking to that. The mindset is a whole nother monster, right? That you have to continue to work on over time. But the risk, right? Math and numbers are pretty concrete, right? Whatever your risk is, whatever that calculation comes out to, stick to it. Stick to it. If it's saying that you only can trade at 2 micros and 3 micros, then you know, stick to it. Stick to it, right? Because the first rule, right, is we want to preserve capital at all costs. Okay. But hey, that's all part of the game. And kudos to you for sticking in it and in it long enough to realize, what you need to improve on. And then, working super hard and showing up for yourself every day to improve upon it, right? Okay. The only way you fail is if you quit. All right. So that's the NZD USD. That's where we are. Deep correction, dollar strength. Take a look at our UCAD trade. Okay. Take a look at our UCAD trade. Reset, we got a new AB boundary in the Euro JPY 1 hour. Let me write that down, see if we can get to it. Euro JPY 1 hour. And okay. Joy says you were stuck in that mentality for a minute. Yeah. 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 It's something that we constantly have to work on. So here's that UCAD, right? Dollar strength. So isn't this beautiful? And how we look at these pairs, how we look for certain patterns to occur, right? So if you get evening stars, right, on your other pairs where the dollar is the counter currency, you're getting morning stars on the other side, right? So like how simple is that once you know what to look for, right? It is a great journey to be on, and it is for sure, right? And that like how simple is that, right? And how we can identify these things once we get a little education behind us, right? So this is pushing up. Look, we pushed all the way down. That makes sense, right? Making ABCD waves, AB boundary forms. Boom, we got a correction, got confirmation with and confluence with key daily levels where we've rejected before. So if you never even had a fib on your chart, right? If all you took from us is how to properly identify your support and resistance from the top down, you'll do okay, right? You clearly see because you've done top-down analysis that this is coming down without any fibs, just raw price action, that this is coming down to a key level of support where in the past it U-turned. Everybody follow me on that? Drop me a two in the chat. All right. Always go back to the price action. Right? Don't get too enamored with the sequence, right? Just go back to the price action, right? And in order for it to come down to the support, it's going to make ABCD waves, right? Now we know we're pushing up without any fibs on here. We've got past support that could potentially become future resistance here, right? In the zone. Okay, we've got a stochastic that's moving up, right? And so it makes sense. It makes sense. So all we're doing is we're measuring that price action with the fib. Measuring that price action. Okay. So as we move down, okay, it created an 80-20 scenario for us. Coming down into that same zone that U-turn. So that's that same, right? So I'm like, okay. We always get support and resistance, but hey, price doesn't always make the reversal at a support level or at a resistance level every single time. It doesn't, right? I've got all these support and resistance lines on my chart. Like, how do I know? Or you never know 100% for sure. That's the game that we play. It's all probability, right? Ryan talks about it all the time. But how can I, gain extra confidence at a level that price may reverse, right? I see it here. So before we even got that U-turn, I see price coming into this major level, right, of support, right? What are some things I could do to give me extra confidence, right? Additional confirmation that this may be the U-turn point, right? You can draw your trend lines. You can wait for swing lows to form, right? On that time frame that you're on or drop down to a lower time frame. So that's two scenarios. Third scenario is you could drop a fib, and because we teach you that the 80-20 is a key zone, if I drop this fib, and it just so happens that in addition to key levels of support from the higher time frame, trend line break, a swing low, I also have this fib drawn on my chart where it's saying that I am in an 80-20 zone. So that increases the probability that that price may reverse. Everybody follow me on that? Yes, no?
Yes, sir.
Daily is a really good chart, right, for looking at levels. It's clean, right? We know the further that down you go, you got more candles, things start to get choppy, right? But it is very, very clean on, right? It's a great chart because some people are like, hey man, that weekly and that monthly is just too long. But I can work with the daily, right? I can work with the daily, So beautiful, right? Beautiful, beautiful price action. So that move on the four, kind of went through that over that quick. But on that move on the 4, right, that's a 200 pip move that we had drawn up. Okay, it's a 200 pip move. So if you can figure out how to get your direction right, right, that's a major part of the battle. Most people can't get direction right. Okay, the timing right on the direction. That's what we're trying to help you to do, right? If you can do that, and you can have horrible entries, but if you got proper risk management, if you ultimately have the direction right, you're gonna win, right? You're gonna win, and you give yourself enough room and enough time and patience. Yep, yep. Appreciate that, Joy. For sure. Hey, we've been through it, right? We it's been a long journey for a lot of us, right? Different trading platforms and different groups but if you're hanging there long enough, eventually you'll find something that clicks for you, so appreciate that because I've been through it myself. I know Ryan has and a lot of people in this group for sure. Appreciate it. So this is where we are, right? We're moving up now. We got non-farm payroll coming up. And not only do we have non-farm payroll, this is the United States dollar versus the Canadian dollar. We also have, which often occurs, right? When we have non-farm payroll, not all the time, but pretty often for the most part, uh, you've got Canadian dollars coming out at the same time, and you got both currencies involved in this pair, right? So let's be smart, right? Roll your stuff up, or right. Sometimes I had to remind myself, like Benny, let's not be greedy. I've gotten the majority of this trade. Maybe I'm taking 75% off my trade, or I definitely moving that stop up, or I'm just getting out of the trade altogether. Man, getting out of the trade altogether, and it's on to the next one at that point. Okay, so let's manage our trades wisely. Yep. So and the best calls ever done a product review on YouTube. Appreciate it. And getting it done. Appreciate it. So let's move on to the dollar Swiss. That's pretty awesome. That's pretty awesome. Growth. That's what it's all about. Right? All of us growing. So look, right, look, we're coming down. Here's our weekly chart. Right. We've got a bullish week. Hey, we know that the dollar's showing some strength. Okay. We've plugged in a low here. I actually need to bring that down. Okay. Okay. And we can see, okay, look at the swing here on the 4, larger fib. Okay, we're moving to the upside. Okay. And you would think the way like some of these pairs are moving that it favors, right? A positive report for the dollar, but I have I have seen it go just the opposite many times. And so here, if you're playing the 1 hour, 80-20, you're at TP1, okay, on the smaller wave. Yeah, oftentimes it lines up like that, right? You get it on 2 different time frames. So it's just a matter of which one that you follow. Okay, that's totally up to you. But that's a clean move there on that dollar Swiss. Okay. So you got a larger play on the 4 occurring, and then you're at TP1 on the 1 hour. Just ahead of non-farm payroll. Any questions on the dollar Swiss? Ryan, are you sitting in this one still? How'd you play this one?
Yeah, that one I am still in it. I've taken 90% off.
Okay.
But I'm gonna close the rest of it there at the TP1 level and wait to see what happens after the news.
Okay. Okay. Denise said they are all 80-20s on the sub here. They are. They are. And those are things that that are pretty cool to like journal. When you get like, okay, we got evening stars and morning stars occurring on the higher time frames. We got dollar strength coming into the new year, which has been kind of tricky because they gave us a dovish tone that completely sunk the dollar, and now it became okay. So we know we've got rate cuts on the table, or we're going to see those rate cuts in 2024 a lot earlier, a lot sooner than later. Well, now bets are kind of decreasing, in regards to if we're going to start seeing those rate cuts in March. So is it going to be 4 rate cuts? Is it going to be 6 rate cuts? You know, um, it's fascinating to look at what's going on fundamentally, and then seeing how things like Benit just said, hey, we've got sub fibs that are all at 80/20s. You know, what does that mean? So we have to journal that and record that. What does that mean coming into a new year? Uh, where the Feds took a dovish tone, but now we're seeing dollar strength because of, Wall Street bets, you know, some growth, uh, some uncertainties around growth coming into the year, which created a risk-off situation. What does that mean? We see it fundamentally, but technically when we see this happening, because we'll see it again, right? We'll see it again, where technically these are 80/20s in the midst of us having a lot of dollar strength. So does it push through and just continue to the extensions without any correction? Or do we get a report that comes out that serves as a catalyst, and investors' interpretations of that report creates a move back down in the dollar, and you see the stock market rally? Those are the unknowns, but they don't have to forever remain unknowns if we document these moments in time, right? So that when we see it again, it's no longer an unknown to us. All right. So just some things to think about. Great observation on that, right? And how these are lining up. Okay. Um, Bottom is great at sport. Yeah, yeah, yeah. Yep. Indeed. So let's check out this dollar yen. Okay. Check out our dollar yen, right? And we read that in the report that the dollar has moved the best, right, against the yen. And we know that across the board. So we can clearly see, right? No swing low yet here uh, on the dollar yen from the weekly perspective. But boy, do we have a bullish candle that started to engulf the rest. Okay. And here we are here. Look at that check back, right? So look at that price action with these dollar pairs. So we saw it on the euro dollar, a pound dollar, where we got that initial explosion. We didn't complete that C to D wave. We've corrected back down, and look at that reaction. So whereas with the euro dollar and the pound dollar, we're just now getting to this low point. You're already getting that. You've already gotten that reaction to the upside off the dollar, and we got above that 144.97 level. So this should be interesting, right? As we take out this high, because it kind of falls in line with the levels that Reese is talking about on the DXY. Like, hey, if it gets above this level, I'm thinking bullish. Well, hey, if we close above this 144, right? But once we get a correction, maybe we look to stay above there. Okay, maybe we look to stay above there. So that's on your daily chart. Look at that, right? Okay. Trend lines, right, are powerful. Like here we are on the 4. Helps you determine the direction, the speed, and momentum of the market. Okay, so we see an inner, outer, long-term trend line, right? As it broke through to the downside. Okay, that's pretty clean, right? If your market charts up the same way every time, the setups will fall in your lap. Okay, that is right off of a 61.8, right? Daily support. So look, we pushed up, taking out this high, taking it out. Okay, now, right, taking out here. See how we took it out there? See how we took it out here? Now we're at this level. Okay. So at some point, right, you're like, this got away from me. No, no, no. No, no, no. Right. We come here to the 4, right? We're way overextended, telling me, hey, we're going to get a correction at some point, right? At some point, here we are on the 1, right? We haven't gotten it. Okay. 236 pushed up, broke the B boundary. Okay? Look at the flow, right? If you frame the market out the way we teach you, that's what enables you to consistently see the same patterns happening over and over and over again. Okay. 236 broke the B boundary, pushed up. We see that. Okay. We see that. We know the possibility. Hey, we get here, we stall. Okay. We stall, we push back down, or it just continues. Lets us know that the bulls have, control of the market. Right. We consolidated and then we broke out. Right now we're above that level, but we haven't hit that D extension yet. We've got a major report coming up at 8:30. So let's see what happens. We know that, hey, if it pushes it to the D, cool. That's fine. We look for a correction and a continuation, right? It just continuously recreates itself, right? Over and over and over again. So that's where we are on the dollar yen. If we go down to the 30 on this one, okay. Come on now, everybody. Somebody tell me, what was this? Well, what was this that occurred?
80-20.
That's it. That's it. Isn't that amazing? Right. So that price action pattern should just alert us like, hey, right, we may see a slowing down of momentum in this zone. And it just so happened, look, it pushed down to find that support, and then it reacted. Right? If your stop's at the D, you win that trade. You win that trade. Now price is taking out the A, so we flip our fib. And that's the beauty of it. Right? Now you got the same scenario where price is pushed up, right? This time it broke that level. See, look, see how it held here? 80-20 scenario here, it broke the level, right? So we'll see what happens. We'll see what happens there in regards to whether we reach that D extension or not. But either way, you're good. Okay. And that's the beauty of the 80-20, because regardless of whether you have the overall direction of the market right, meaning that when I say it doesn't matter, is that if you played this scenario on this fib, right? If you played this scenario, this 80-20 play here, okay, and you took that to target 1, or you took it to target 2, follow me now, okay? We're talking about this scenario here. Once it gets to target 1, or like I say, even a target 2, okay, listen to me closely. Once it moves to your target, you're saying, hey, I'm playing 80-20s. And it gets to your target 1. Or your target 2. Once it's reached its destination, and it's hit your target and you've made money, doesn't matter if whether or not it turns over that 61.8 and goes short, or if it takes out the A like it did. Doesn't. Your target has been reached. Everybody follow me on that? Yes, no?
Yes.
All right. That's the beauty. That's the beauty of that trade, right? That's why it's the bread and butter, because it's just like, I don't even care, right? If it turns over and it goes to the D from here, right, and I'm only playing 80-20s, so what? If it does, then guess what? When that new fib forms, if price makes this shallow retracement, and it moves down to that 118, 127 zone, I'm going to look to play it again. And if it moves to my target, to a 382, for example, I don't even care what it does after that. Right? Okay. If it pushes up after it hits my target and it takes out my A like it did in this example, right? And it takes out the A, I don't even care. Because when this new fit forms, I'm going to look to play it. That's what I mean that when I say like it doesn't even matter. Right? Because I am out unless you know, if you hold a position, you take it to TP3 or whatnot. But at the end of the day, like my target's hit, mission accomplished. I'm gonna let it run, do what it wants to do. When I get that new AB boundary to set up, I'm gonna look for the same thing to happen. If it breaks the B boundary after a shallow retracement, less than a 382, I'm gonna see if it falls into that zone, that 80-20 zone, or rises to that 80-20 zone, and then I'm gonna look to make the play. Any questions on that? It's like it doesn't matter, right? It doesn't matter. It doesn't matter. You know, especially if you're a new trader, you know, and with trend trading, you know, you want to make sure you want to do your best from the top down to make sure you got that overall direction right. You know, and we know historically, right, your strike rate with trend trading is much lower, right, than when you're trading those corrections. Right? That's just the way it goes, right? But we found a way where you can still, even with the counter trend, get a decent risk to reward, you know, and have a pretty high strike rate. That's rare. That's rare. Just saying. Last one we'll take a look at is gold. All right, and we'll close out. I want to make sure we got through these dollar pairs. Okay. So we will see where gold is sitting back up at that level. Right, look at that. A lot of wicks up around that area. Okay. This is where we are. And we know the dollar's been bullish, right? So it's pushing gold bearish. So here we are. It's kind of like that secondary check back again, like we're seeing with the rest of the pairs. Like here, huge, undeniable. That's moving long at the time. Now we've got a correction. Okay. All right. So good to keep our eyes on this, right? See how we drew it up. All right. When we're going over this, only a couple scenarios. Once that AB boundary forms, okay, and we're within that AB boundary, we're at 2047 level. Stochastic on the one is in the buy zone. We've got to wait and see what happens with non-farm, right? And then, so that's gold. And then, Risa mentioned this Euro JPY on the one and said we've got a new AB boundary, everybody. ABCD wave, right? And we're right at this 158.47. That's where we are, right? So that's what Reese was talking about. So we know there's only a few things that can occur when that AB boundary forms. And that's the beauty of what we do. Ryan, anything before we close out today, sir?
No, sir. It's been a great first week of the year and great session, bro.
Appreciate it. 80-20 on the 30. And who is that? Okay. Jeremy, 80-20 on the 30 minute. This, right? So I'm going to assume 30. Let me see. Ran it right off that low. I see. I see. Right? Reese and Jeremy, sevens all day, every day. Right? Hey, Benny, we got a new AP boundary on the one. Jeremy says, precisely, sir. We've got an 80-20 on the 30. Great teamwork on that. Let's see what happens. What happens with this yen when this non-farm payroll comes out? Boom. Work, everybody. Teamwork makes the dream work. Hey, as always, we appreciate all of you being here. And like our mentor says, as a reminder, don't just count your pips, count your blessings. Have a great rest of your day, everybody. Let's pay attention to that non-farm payroll. We'll make sure we get some data out in the chat after the non-farm payroll comes out. After the employment numbers come out for Canada, we'll have a summary for you guys. Have a great rest of your day. Bye for now.